What's up, guys? This is Brian Mitchell from Trade Algo coming to you live Wednesday, almost 7 p.m. Eastern, September 24th, 2025. Today was today was very uneventful, minus that huge dump that we got that just didn't respect any technical analysis today. We'll go over it today. Actually had a losing trade today. Not terrible, but mitigated the risk by averaging strategically. If you guys missed that trade, it was posted in this chat in the live sessions day trade with Brian. I'm going to click right here on this little black box where you see me waving my cursor. This is the guidelines of the room, or the rules of the room, if you're not familiar with them and you do participate in here, because football games, golf, trading, everything that's competitive has to have rules. Otherwise, you're gonna, if you're in football, you you get a flag, and same in soccer, you get a yellow card and then a red card. And if you break the rules, you're hurting yourself. It's no different in trading, guys. So if you don't have your own set of rules through your own experience, like, oh, I should always put a stop loss, or I should not size heavy when I'm not sure, or whatever your rules are, usually if you don't have them through your own experience, I would encourage, not financial advice, to borrow mine, right? And that kind of leads me to, I should start off every video with saying, I don't ever offer financial advice. Everything here is education, right? It's to show how it is possible to be profitable, right? It's to show, if you did this, and we'll do a little bit of hindsight trading, we'll do a little bit of analysis, or I will, but in no way any of this information should be misconstrued as financial advice. That being said, let's open up the Technical Analysis Bible, which I put in the description of every single video. As you guys well know, it's available to the public for free, this little document here. I clicked on the black button, right? Click on the black button and just click that little hyperlink where you see me wave my cursor. It takes me to this document. And on page 1, section C, is the Technical Analysis Bible. These are rules of technicals that only work if the market is not emotional. Today, the market went into a free fall panic selling mode, right? And when I enter trades based on technical analysis, those work only when there's no emotion guiding the price action. Now, if there's bad news that comes out, like Trump's tariffs might get reversed. I think that was the headline today, and then it started falling in free fall. When the market engages in fear and panic, it doesn't matter if the emotion is negative. Emotion will water down technicals. It doesn't even matter if it's good news, causing everyone to be euphoric and exuberant and optimistic. Emotion will water down technicals. So positive or negative emotions, not bueno for trading. And us being in this hyper news cycle where the market seems to seemingly move almost exclusively off of news and news only 90% of the time, it's been kind of tough to trade the past few days. The good news is, if you engage in a losing trade, a skilled trader will mitigate the risk so that you don't have a crater in your account, right? That's if hypothetically you're following that person, right? I can only speak to this as far as to what I'm doing. Now, let's go over SPY, QQQ, IWM, and then Bitcoin and Ethereum. So in yesterday's video, I said I'd be doing these a little bit more often. I was looking at the 10 simple moving average, which is this green line you see here, which I use for bullish continuation. It is my closest thing to a VWAP, say for instance, or a momentum indicator, right? The simple moving averages. Why do I use the 10? Because a lot of people like using the 7, the 9, the 11, the 13. In my opinion, the 10 is in the middle of all of those. And usually, even if we go down, we'll test all of them before we go back, right? So the 10 is in the nice middle, and it's a simple moving average. If you use EMAs, they're very similar. Just do what's in your best interest, obviously. And in yesterday's video, you saw that I was basically seeing the price action, right? That we bounce off the 10 right here. Then we stayed a few days up, bounce off the 10 right here quite beautifully. Then we stayed a few days up, a little bit shorter than this period. This was like about a week and a half. This was roughly about a week, right? And then I wanted to bounce off the 10 and then a push higher, but we did not get that. In fact, the bad news came and then we cratered into it. And the way we started just struggling, clawing back, it was just such a brutal climb up. Lets me think that, yeah, we're at all-time highs. And I mean, we were at all-time highs here. We were at all-time highs here. We're still at all-time highs, but how the market reacted to this 10 simple moving average is what matters. Now, it's not to say it's not possible for this market to go up, right? We're not in the game of predicting the market. Those who try to predict the market usually lose more money than the person that reacts to the market. How do I react to the market, Brian? Well, I buy calls at support and puts at resistance with confluence. That's simple, right? Now, that gives you your best shot, right? Are you going to win all the time reacting to the market? No. Just like today, hit me in the face with a 20-pound fish. So we even closed below the 10. You see the middle of the candle? It closed right underneath that line. It actually bounced off beautifully and nice little space off the 10 and then huge space off the 10. This time we closed under it, which lets me think it's possible that we will get bearish continuation. And why do I say that? Because typically, I'm going to go to the 4-hour chart. This is the daily chart. Each of these candles represent one day. If we go to the 4-hour chart, we get about 2 of these candles a day. Not 2 complete candles because we have 6.5 hours of trading, but the 4-hour chart, it'll give you one full 4-hour candle, and then it'll give you a 2.5-hour candle. But it's basically 2 4-hour candles. You see here that between the last 3 4-hour candles, let me just fix this really quick. Candle 1, 2, and 3 right here on the left-hand side of the screen. Candle 1, candle 2, candle 3. It formed a bearish fair value gap. See the wick of candle 1 and the wick of candle 3? See how it formed a gap right there? Typically, when bearish fair value gaps form, that signals more continuation to the downside. Even if tomorrow we go back up and retest it, will probably move downwards, right? And then the market has some decisions to make, right? Will bad news just ever so conveniently just keep on making it go down even further? I don't know. That part, I don't know. Then we're going to have to start making some hard decisions at, okay, where's the high or low in this market? There are a couple of them right here to keep the uptrend alive. One is right here and one is right here. So tomorrow, let's just say we go up to touch that bearish fair value gap and then just liquidity grab. And then depending on how we move up from there, lets us know if, more downside or less. But right now, in the balance of probabilities, it looks like even if we get a slight uptick tomorrow, that the selling pressure will continue. How much? I don't know. Remember, we're not here to predict the market. Unless you have a crystal ball, please share it with me. I'm not quite sure, but it looks like I would give it 60% chances of being bearish, 40% chances of being bullish, because that could be a fluke, and then we could just shoot on upwards, right, to new all-time highs. Who knows? But a little bit tough to say what the market wants to do, right? And the bullish case, I can see here, we didn't really close too far under the 10 simple moving average, right? Like I said before, this could be a little bit of fluke. It's not like it closed like down here convincingly. It's what I call a barely, like just right below it. And usually that's a fake out. Not usually, sometimes a fake out. And another thing, we had a gap that formed right here. We just filled the gap. What happens when gaps fill? Let's go to the technical now survival rule 10 on gaps. Once a gap is closed or filled, there is a high likelihood price will reverse. So I can argue this both ways. The bearish situation, closed under the 10, formed a bearish fair value gap, maybe a little bit more downside. The bullish situation, hey, it's barely, just ever so barely closed under the 10, and hey, we just closed the gap, might go to the upside. That's called conflicting information, right? When an argument could be made for both bulls and bears, that's really signals uncertainty. It could go either way. That's why I was saying 55-45, 60-40. It's really tough to say what the market wants to do. because we're near all-time highs. The market might need a breather, might even consolidate tomorrow and do none of what I said. So consolidation is just a fancy way of saying sideways, right? If we go to the Qs, I pretty much see it's the same exact story. Now the Qs, a little bit more convincing than SPY, right? The Qs did what I wanted them to do in yesterday's video. Qs came all the way down here, nicked the 10, and then moved on upwards. Now, I actually started getting in right here, had to average at another area of support, and then my last average was here at the 10. As soon as I got a little bit above break even, your boy got out because it was brutal. Averaging down twice and putting the same amount of money in your initial premium. Let's just say you spent $300 here, and then you have to spend another $300 for this first average. So now you're $600 in the hole that can go that can go worthless on a 0 date, a same day expiration, and then you average a second time. So 3 different entries on the same trade. And now you're $900 in the hole if you initially started off with $300 hypothetically. And then you're just, as soon as you break even, you're like, I'm out. I am out. But it's unnerving to like have so much money on the line. Relative to your position size, averaging twice. Typically, I hate averaging, folks. I do not average. It is a losing strategy unless you do it extraordinarily strategically. And this is the second time this week that I had to average twice. Yesterday was Amazon, and I just by the skin of my same exact situation, deep liquidity grabs below supports. QQQ went past a 1 hour demand, past 2 4 hour supports. It was brutal today, guys. But bounced off the 10 kind of nicely, what I wanted to happen on SPY. And it might be, this is looking more bullish than SPY, right? Because of how it bounced off the 10 simple moving average. Even if we go back down and test it again a little bit tomorrow, let's just say SPY is bearish and then Q's touches, roughly the 594.5 level, 594.5 or 0.75. I'm just rounding down a little bit. It could bounce there at the 10 simple moving average. But like I said, SPY and Qs usually move in tandem, which means one follows the other. Qs are a little bit more tech heavy, which means that they have a larger allocation of NVIDIA, Microsoft, and Apple in its holdings. You should Google that if you don't know what I'm talking about. How much of Microsoft is in QQQ? Google that, and you'll see that the percentage amount that Qs holds is different than SPY. QQQ is more tech heavy, which means it has a larger allocation of those 3 tech stocks, right? So Qs look bullish. Let me look at the 4-hour time frame. No bearish fair value gaps formed. So tomorrow we might have an update. It's possible. IWM is the Russell, small cap stocks, and we are just moving sideways. This is barcode central. Looks exactly like a barcode. So IWM likely to follow the indexes tomorrow. Whatever Qs and SPYs decide on together as a team, IWM is more than likely to follow them as the third wheel, right? So I don't see this being bullish. I don't see this being bearish. It's not forming lower lows for a downtrend. It's not forming higher highs for an uptrend. It's just moving sideways. So let's take a look at BIDI and ETH, and we'll wrap this up. Bitcoin. This looks bearish to me, folks. This looks bearish. So I'd like to say that we pump up from here because everyone in the crypto market, CT, crypto Twitter, wants Bitcoin to go higher parabolically. Me too. You can see here higher high, higher low, higher high, higher low, higher high. And then you get into a downtrend when you break the higher low in an uptrend convincingly. We went down here, protected the higher low, went up, but then we lost it, right? And went down here. This is basically about to get smacked back down unless we can close above this level convincingly. And the key word is convincingly. We need to close above 117.5, right? So I still think we're in a downtrend. I think this is just an exaggerated leg up before more downside. So also, what I just finished saying with what I just finished saying not too long ago with SPY, I think it was. This just formed a bearish fair value gap on the daily. I don't know why that kind of escaped my attention. Let's put 1 day bearish fair value gap, FPG. Yeah, this does not look good. So it's at the bottom of the bearish fair value gap. Also, if we zoom in, you can see that there was a bearish a supply that formed right here with that aggressive drop, a 4-hour bearish fair value gap there, a 4-hour bearish fair value gap there, and another 4-hour bearish 4-hour bearish fair value gap. Wow, that's a tongue twister. I didn't even know that. And we still haven't invalidated any of them. We still haven't got a candle close above this bearish fair value gap to take it off the charts. I mean, much less this one and much less this one. And it's going to be really hard to cut through this cheese. If anything, I expect a dump, right? See how every time we try to climb up, we get viciously slapped back down. I mean, this is the weakest upturn if I've ever seen one, right? I don't think we're ready. I'd love to be pleasantly surprised, but this looks like it has further downside. So where are my buying targets? Let's zoom back out and see what hasn't been touched. What do you mean, Brian? Well, Rule 12, if you read this document like I do every day, I genuinely do read this every day because I want to prime my brain on, I want to recall the information easier, right? And I hope you folks do as well. Rule 12, the first touch, not the second, not the third, not the fourth, not the fifth, not the 20th. The first touch of a major support after it forms, or first touch in a while, is typically the strongest bounce. So I want to look for something a little bit lower that hasn't been tested yet. It looks like we're going to be forming a new support right there. See how the chart pivots right there? We might even hang out here sideways, and we might get a bounce at the 111,991 level, or we might even come back to test the lows, 111,515. Right? So those are my two buying levels. A very tiny amount at 112,571, 112, let's just call it 112,580, right? And then 111, 520, right? So these two levels right here. And then place where I shouldn't be saying this because this is what I'm going to do. I was about to say full port as a joke, but maybe I'm joking, maybe I'm not. I'm super unbelievably bullish. See how it says bullish right there? I'm super bullish around the 110, 107 level. This is where I start allocating a stupid, unhealthy amount of money into a long on Bitcoin. I'll blow up an account for that. I would, because I have unbelievable conviction there. I could leave half my account on a position that big and not sweat, not even a little bit. I'll go to bed like a baby. And no, does that mean do 100x leverage down there because Brian's confident? No, that does not mean do that. I would probably, in all actuality, do a low leverage, if not just a spot position, no leverage at all. Why risk blowing up your account? I'm just confident that we will, even if it gets down to the 107 level, that's where you see this black box. This is my super ridiculously, I be so unbelievably shocked. I'll do something stupid. I'll run through the street naked and just to prove myself that I don't think it'll go below 104 really. This is like this is really the full port zone is what I would call it. I don't think we get down here. I really, really don't. But great if we do. That'd be even better. I think that this was a planned and engineered kind of dump. And it wouldn't shock me to get one more to get everyone in fear. The calling for 60K Bitcoin and all the nonsense you see on social media. I buy when there's blood in the streets. That's the perfect time to buy always. The perfect time to sell is always when you're like, but it can go higher. That is an indication to sell. That is an indication that you're just FOMOing, right? But it can go so much higher. No, don't do that. Ethereum, I actually had a really nice trade on Ethereum last night, but we can't really discuss that here because Trade Algo focuses on equities. But my buy zones on Ethereum are going to be the 4,000 level. And if it does nuke all the way to 3,800, 3,850, I'm a super buyer, right? Super buyer at 3,850. All right. Bookmark this, write it down, put a post-it on your head, maybe not your head, but put a post-it on the wall next to you. And when it manifests, and I'm gonna clip this video and show you the date and show you you should have bought. Not financial advice. I'm just saying hypothetically, if I was speaking to myself, I mean I'm gonna be buying, but to the self in the what is that universe called where there's split selves in an alternate universe, the version of Brian that didn't buy for XYZ reason. I'm gonna clip my own video and show it to that version of myself. All right, I'm just being facetious for fun, guys. So that's it from me. I gave you the levels that I'm personally buying on Bitcoin and ETH, what I'd like to see tomorrow for the indexes, but I play the indexes by ear. I'm a little bit more interested in what crypto is going to do. So if you guys have questions, if you guys are part of Trade Algo, I can't speak today. You guys are part of Trade Algo. You guys can always email me at Brian, Brian, at tradealgo.com. Or if you're not part of Trade Algo and you have yet to join, leave a comment. Am I wrong? Am I an idiot? Am I right? Is the analysis sound? What should I work on? Should I speak slower? Should I speak faster? Should I make more jokes? Should I show my face? Not. All right, guys, I'm done. I'm done. Have a wonderful evening. I will see you guys tomorrow, hopefully on Thursday. Hopefully we get some juice. And I'll see you guys on the winning side of the fence. As always, everyone take care.